Thanks for joining us, Alan. Now, what do you see as the key role for emerging economies in global FDI flows?
Well, FDI flows have been one of the major drivers of the world economy for the last 10, 20, 30 years now. And the trend has been upwards, at about 14% compound growth, until the last 2 years when FDI flows have fallen in the crisis. But within those numbers, the emerging markets, the significant countries like India and China in particular, have become increasingly important and now account for about a third of all FDI flows in and out. And that trend is only going to continue as India and China become more important, as companies from India and China become larger and more competitive. They will be a greater part of FDI.
Now, a lot of Indian and Chinese companies have been acquiring companies abroad, mostly in Western Europe and the US. Now, what are the key challenges that you see for these companies as they continue to expand overseas?
I think the critical issue is how do you behave after you buy an asset? It is relatively simple to acquire assets overseas. There are risks, of course, in doing a deal that you pay too much, you don't do your due diligence, whatever. But the critical issue is how do you behave after you've made an acquisition? And I think here, India in particular has a strength by the quality of our corporates compared to some other emerging markets, the quality of our management, the degree of our international skills of our management, the language, which Indians tend to be more culturally comfortable with diversity and foreigners. We still, though, lack experience from India in managing foreign assets. And I've been talking to a number of Indian companies about just this issue quite recently. Once you've made an acquisition, how do you manage? How do you treat local communities? If you need to downsize, to restructure because the economy is not doing very well, how do you do that? How do you incentivize management? How do you keep management? How do you treat employees? How do you deal with the wider community issues? These are issues, of course, that when we think about FDI coming into India, we're very familiar with the nasty foreigner who makes mistakes, who does things which upset people, the unions or the consumers or the government. We now need to learn the same skills as we go overseas and we manage assets in Africa or in Europe or in the US.
Well, we have seen a rising trend of companies from emerging economies acquiring assets abroad, but do you think that antipathy towards them in developed countries, has that gone down?
I don't think it's gone away, but I think India has faced less of that than other economies, particularly China. For whatever reason, Indian companies have found it easier to acquire assets in the US or Europe than Chinese companies have, possibly because we have been less focused on just acquiring natural resources, which can be quite sensitive in countries like Australia or Canada or African countries. It may also be that India is perceived by Western countries to be less of a threat, more of an ally, potentially long-term than other emerging markets like a Russia or a China. Might be. Whatever reason, I think Indian companies have done better on managing the process of doing an acquisition. That doesn't mean that Indian companies have already won. Sometimes they've lost out. Sometimes they've won and wish with retrospect that they hadn't won. But anyone, as I say, that has enough resources can buy an asset. Not every time. Sometimes you lose and sometimes you win. But much, much more difficult is what you do with that asset in the long term.
You are advising a lot of foreign companies, especially British companies, to enter India. Now, what is the sense that you get from them? Do they feel that it's easier for them to invest in India? What are the issues that they face?
Talking to companies in the West, and indeed other emerging markets, everyone now accepts that India is an emerging story they cannot ignore. But many people are still very skeptical about the practicalities of doing business in India. And frankly, we in India don't do ourselves any favors by the way we behave. Some of the legislation that is introduced, the new Competition Act, which is now being gazetted, the new tax code is being talked about. These types of issues do not send mixed signals to investors. And the war stories, the stories of I invested in India and it was very difficult, those stories persist. So FDI is a wonderful driver of economic change and development and wealth generation. Just look at China. China has driven its amazing growth over the last 20 years, principally through FDI. India has been less comfortable with accepting foreign investment, And I think that's to the detriment of India. So it will be very good for the Indian economy and for the Indian consumer and the Indian employee, the young people of India, if we got over what I call the East India Company syndrome of fear of foreign investment. Because after all, once a foreigner buys an asset in India, has invested his money, he can't take that asset away. He can't remove it and take it offshore. So he is then committed. And that is for the benefit of India long term. So I would welcome India continuing to send positive and predictable messages to foreign investors, welcoming foreign investment, liberalizing further, because I really believe that India is one of the countries that will benefit most from the continuation of globalization.
We've been talking about countries investing in each other, especially developed countries investing in developing countries and vice versa. But do you see an increase in trend of developing countries investing within each other? For instance, would India and China invest within each other? Do you see that as a trend for the future?
The answer is too short, and we're talking of long secular trends, but I've chosen to set my business up in Hong Kong because I believe that long term, the access between India and China will continue to redefine the world. Indian companies have been more forthcoming about investing in China, particularly Tata's and Bharat Forge and Mahindra, Infosys, have led the trend. Chinese companies so far have been more tentative about India. And the Indian government, in the way that it's treated certain Chinese potential investors, has not helped that. Now, obviously, trade is different. Chinese companies have exported to India. Chinese companies have won projects to do infrastructure in India. But Chinese investment in India has been minuscule. That will change because if you are a Chinese company, where are your markets in the long term? Where do you sell power plant? Where do you sell chemical plant? Where do you sell consumer goods? It's increasingly countries like India which will be the market for Chinese companies, and therefore Chinese companies will need to invest physical assets in India, manufacturing plant, research and development facilities in India for their own benefit long term.
Thanks, Alan. Thanks for joining us.